Hey guys, this is Alex, and I'm just making this quick video here to show you my trades from today, the 16th, and to mention that I don't believe I'm going to succeed in making a recap today. I feel extremely terrible right now. I'm under the weather by quite a bit, and so I think after having tried for the last 2 hours to make this recap and not doing very well with it, I think I'm going to leave this one till tomorrow and hope that I feel better at that time. Boy, that guy sure sounded sad, didn't he? Well, that guy was sad, and yesterday was a day where a lot of things didn't go my way. Even though I closed with a pretty good green day, being up 7% on a $171 winner, I ended the day early and I gave up a lot of opportunity as a result of my physical condition. So now that it's the next day, this is the problem with delaying recaps, is that when the information isn't fresh, it's really difficult to be able to recap the trades and go through all the things that I was thinking at that time. But most importantly from yesterday is the way that I felt and the information leading up to the day. So that's what I'm going to talk about now, and I'll recap the trades briefly thereafter. Also, one thing that I'm going to do at the end of this video that I just forgot to mention is that I'm going to share with you a live video that I took yesterday on a run on BNGO, and it's going to be a 5-minute snippet. I'll fast forward through a bit of it, but it's going to be a snippet of time where BNGO was halting up and down. So if you're new and you're not super familiar with what halts look like and how risky they can be and how extreme they can move, stay tuned for that. It's going to happen at the end of the video. So the background leading up to this day was that on the 15th, I went over to a friend's place to use his much faster internet than mine in order to upload a bunch of the recaps that I'd recently made. And we had supper together during that time. We had steak and asparagus and potatoes, and that's one of my favorite meals. And so it started out very good. And I uploaded everything. Everything went well there. And I was having a good time. We had a couple beers with dinner. And the couple beers turned into a lot of beers. And I'm a pretty lightweight drinker, which you won't be able to tell by listening to these recaps because I have mentioned me doing this a couple of times. And long story short, I found myself wobbling home, walking, taking the entire bike path that I was walking on in order to just go in a straight line. And there were even some people in the parking lot that pointed me out to each other and were getting a kick out of me. That's one part that I remember. But in any case, I woke up fully clothed on the 16th, which means that I just passed out on my bed randomly, and I didn't drink any water before I went to bed, which probably didn't help the way that I felt when I woke up. And when I woke up late. I fought my alarm 3 times. I hit the snooze button 3 times, which is already a bad sign. And I failed a bunch of pre-market checklist items in terms of discipline. There were a lot of things that I didn't do, and I was feeling like maybe 50%, not even. And I was really, really on the fence as to whether or not I should even trade. And what I ended up doing, with the main consideration being all the order problems that I had the previous day on the 15th, that was still playing very heavily in my mind. I had checked my email earlier in the evening, and Dash Trader had not replied to me. And when I woke up the next day on the 16th, they still hadn't replied to me with any kind of definitive answer. And even though I had done a lot of tests on the 15th after I'd made my recap, I still wasn't feeling very comfortable. I thought, well, there isn't a definitive answer here. This mystery is not solved, and this may reoccur, and I don't want it to happen. And so that was really playing heavily on my mind. Added to my physical condition of not feeling 100%, it seemed to me like a clear-cut decision to just not trade. On the other hand, I counter-argued that, well, there's bound to be quite a bit of easy money in the market today, and is it really a smart decision for me to bypass all that opportunity? And so the deal I ended up making with myself was that I would allow myself to trade, but I wouldn't let myself go deep into the red. And on top of that, no matter what happened with my orders, I was going to keep the result. And that's really a significant thing because, yesterday on the 15th, you saw how I ended up closing, I think it was up like $900 on DTSS after having walked away from my computer and being stuck in this trade. and the market just happened to bail me out. But if it didn't, I mean, at the time that I left to go to breakfast, I think I was down something like $300 on that stock. And so it could have easily gone either way. And so coming into the 16th, I told myself it doesn't matter. No matter what the result is, you're going to keep it. And that was sort of the condition that I allowed myself to trade under. And that's a really significant thing. I mean, I could have blown up my account. I could have more than blown up my account. Let's say that I had a trade where I lost $3,000, which is more than my balance. I would have forced myself to reload with the 3,000 I have simulated in the bank right now. I would have forced myself to reload and then pay off that negative balance. And so that's a really big deal, to come into the day thinking that, well, this weird unrealistic problem could take place and it might cost me my entire account. And so I was really unwilling to let myself make too many mistakes, and just intending to book profit pretty quickly. I was going to let myself be satisfied with whatever green trades I was able to come up with, and if anything looked really sketchy, I wasn't going to get involved. And so that's the attitude that I came into this day with. So I did something on this day. My first trade was on IPWR, and I did something with this stock that I almost never do. Maybe 1 out of 50 or 1 out of 60 trades I will do this, and that is carry shares into the open. And normally the only way that I do that is when I'm already up a bunch on a stock pre-market. So the chart in question here is the one up top. I'll extend it to cover the bottom one. And you can see it made a pretty substantial move pre-market, but I didn't catch any of that. I don't remember exactly where my entry is, but it was somewhere around here. And it was, I think it was this candle here at 9:12 a.m. Yeah, that's what it was. And I took 250 shares at 410. And my stop initially had been down here at 360, which was pretty wide. But I was very quick to move it up. And my hard stop eventually became 385. And what happened here at the bell was that it squeezed up very quickly. This is a 5-minute chart that we're looking at, but this was visible on a 1-minute chart too. The spike up out of the gate was a 1-minute candle that spiked up very quickly. And I'm not going to talk too much about it, but the important factor is that I added 125 shares at 456 in the first minute of the day. And that brought my average up to about 425. And what you can see by these bottoming tails is that, first of all, on this candle pre-market, the last one, I came within 1 penny of my stop, and I had my finger right hovering above the Control Z, and I was just about to punch it when it bounced. And then that happened again, but more importantly, it happened after I added at 456. So I let this trade, I was risking almost $140 on this trade, and I very nearly stopped out of it twice. And that made me pretty nervous, I must admit. But I did force myself to correct a behavior that I'd noticed in studying my old recaps, in stopping out too early and missing out on the winner. And I didn't do that here. I'm pretty happy about that. It was a very close shave. And I started selling at 448. I wasn't super convinced that the move up to $5 that I had expected, that was my target. I wasn't super convinced that it was going to happen. And because I had gone so far red on this trade to begin with, I just wanted to get out. I wanted to reduce my risk. I wanted to take exposure away and just avoid the chance that I would book a big losing trade. And the average exit I got was, I think, around 460. My sells were at 448, 463, and 474. So you can see that my going in, my target had been just below $5, and normally if it had just run up cleanly, I think my first sell would have been around 474. In this case, that's where my last sell was. So around the time that I closed this trade, 2 things were bothering me. Number 1 was a headache was starting to pound. There was sort of a pounding centered in my brainstem that was becoming increasingly distracting. And I thought that there was a good chance that I would just end up making this my only trade of the day. And the other factor was that the risk reward that I ended up getting on this was terrible. I risked about 140 and I only made, I think, 136. And so coming off of a win like that was so sketchy and so close to being red, I thought, well, maybe I should just, listen to the signs and forget this deal that I made with myself and just close this day right now and be happy that I didn't book that loss. And what I ended up doing was scanning around, and I took about a half-hour break. I closed my IPWR trade at 9:37, and then spent the next 20 minutes or so looking around at the market and deciding against things. Now, starting at 9:46 a.m., I noticed a sort of a pattern throughout the market of halts starting to come in. Volatility halts were starting to really become visible in multiple different names at once. The first one I noticed was AEMD, and I was pretty quick to decide against this one. It had very big spreads, low volume. The daily chart did look okay, but it didn't have a news headline. The float was a little bit high, and I decided that it's just not worth the risk. This isn't the kind of thing that I want to get involved in. There will be better opportunities if the momentum is real. And at 9:54 a.m., just before DTSS halted for the first time, I started noticing that, and I thought, okay, well, it went on a big run yesterday. It's definitely on people's radars, even if it's not justifiable, and it's there's no fundamental catalyst. Well, it's at least a low float stock that has a recent history of making huge moves. And but the problem was I'd failed to look into it pre-market. I didn't have a lot of study done on this name, and I saw a support reaction at $2.50 from the previous day. But once again, I decided this is too risky, and I'm kind of afraid of playing the symbols from the previous day. I wasn't really confident that there would be continuation on such a technical heavy setup. And so I ended up deciding against this one as well. Now, the one I eventually did decide to get involved in was what we've been looking at for the last minute or so. This is BNGO, and I only noticed it right here at around 10 a.m. when it was halted at 1:39, and I was kind of bummed out immediately that I had missed this, because I looked at this pre-market, and this was, to be honest, this was my primary thing on my watch list. I'd seen this huge move pre-market, and then what I really liked about it was the lack of defined pivots on the way down. It kind of just retraced its entire move, but the only well-defined pivot was right here at 144. And that really interested me because it offered a clear-cut profit target for anybody who was going to get in if it had bounced up. Now, I was upset with myself because I didn't notice that it had bounced, or it had based out rather, at 105. And if I had been paying attention to this, I probably would have gone in a lot earlier than I did. So I've switched the chart over to a 1 minute time frame because that's the only way we're really going to be able to see what happened on this stock. Now, my plan coming in, because there was such a huge window on the 5 minute and the daily chart, my plan was to load up at the lowest possible risk. I had looked back on my trade on IPWR, and I wasn't happy with it. I wasn't happy how much I set myself up for a big loss, and so I decided to scale into this thing very slowly. I started with an entry of only 250 shares, and I took that as a seller at 145 broke, and my stop was going to be really, really tight. This bottom line at 140, that was going to be my stop. And so when it resumed out of the 139 halt at 146, it can just kind of flash back and forth for a little bit in between 140 and 150, or 145 and 150 rather. And then it came all the way back down to 140, and I very nearly once again stopped out. However, because I only had 250 shares, I was only risking like 15 bucks or something, maybe 16, 17 with commissions. And I was super comfortable with that. What ended up happening instead is that it pushed through another seller at 145, ripped through 150, and I added 125 shares at 150. And I decided not to add further going into the first halt, which happened at 162. I decided to just hold and see what the resumption looks like. Now, at that point, with an average of like 148.33 or something like that, I felt really good about my situation. I thought, yes, I'm right. Like, look at this volume spike down here that squeezed into that first halt. It's an 827,000 share volume bar. And I thought that was a really good sign that the rest of the market had started bandwagoning on the idea I had that this was going to reclaim its entire move, into the 250s and 260s. And I thought, wow, I could make $1 per share on 1,500 shares if this goes my way here. And on top of that, it's probably going to halt several times over, which is going to slow the pace It's going to let me kind of adjust my ideas. It's going to give me 5-minute breaks and let me reconsider and not have to deal with the pressure of constantly reading the tape and constantly reading the level 2. Now, if you don't have the same kind of mid-halt level 2 depth that I do with Dash Trader right now, then what I'm about to say may be confusing. But keep in mind, at the end of the video, I am going to play that video that I talked about earlier of the halts. And so you're going to get to see what I was talking about towards the end of this recap. So if you don't understand right now, don't panic. But what happened almost as soon as it halted at 162 was my level 2 was showing a very heavy imbalance to the buying side. Almost as soon as it halted, the mid-halt price jumped up all the way up to 175 and later squeezed all the way up here up to 185. And the reason why I didn't think that was positive is because I thought that was a big enough move to make people who bought down here start massively selling. And the effect that would have is that the support and resistance levels that I would have normally taken as support and resistance on the level 2 would no longer necessarily be valid. And a lot of that had to do with the volume. There were definitely people who had probably, 25, 50, 75, maybe even 100,000 share positions on this thing. And I knew that. I was aware of that. And so I thought that it really wouldn't take much for big orders to just flush out in an instant. And so I felt I wouldn't be able to rely on the support that I would normally rely on the level 2. So what ended up happening during this halt, this 5-minute halt, is that even though the price had gapped up during the halt up to 185, towards the last few seconds of the halt, it started going down. And that made me really nervous. That made me think that we're probably going to get a pretty severe flush here. And what I ended up doing is I put out an order, I think it was 175 shares out of the 375 that I had. I put it out at 170 and I had my mouse cursor hovering over the sell button, ready to jump out as soon as it resumed. And it resumed at 10:10 and 22 seconds. And I sold those 175 shares at 10:10 and 23 seconds. So only 1 second after the resumption, I smashed the sell button for half of it because I started thinking that if enough pressure came in, we're going to squeeze into a downward halt. And that's not something that I was willing to hold through. And that's precisely what happened. So I ended up ditching the rest of this at 158 as it halted going down right here. And just like that, I was out of the position. I was super pumped up to be riding this all the way up to 250 and get really heavy on the share size. And all of a sudden, I found myself having to stop out, even though it was a profitable stop out, even though I did make 8% ROI on this trade. And, it was altogether really good. I got a 4-to-1 risk reward ratio. And that's still something to be happy about. It really kind of took away the dream scenario of booking a home run, which I was super confident would happen. So now I fast forwarded the chart to show you what ended up happening, and it turns out I was right. It didn't happen at the time that I expected it to, and it ended up coming down to 133, which I definitely wouldn't have been willing to hold through if I had held those remaining shares. If I was going to play this, it would have been a stop out and then a get back in later type situation. And it was a halt fest on the way up. I mean, we halted here on the way up, first at 139, then at 162, then going down at 159. A little bit of consolidation, drop back down, a curl back up, halted again here at 173, at 188, at 210, etc. It just kept on halting, going up, going down. And I had started trading this in my head. I didn't want to foggy up my trades window by taking any practice trades on it. I was still thinking about taking a live trade, even though once I stopped out of it, I kind of thought, okay, this day's over. I'm just going to take this $170 and, my headache was so bad by this point, I could barely even see straight. It was really starting to mess with me. And despite the strength of the opportunity, I felt like I can't be on my game right now. There's too many things going against me. And even though this may resolve exactly the way I wanted it to, which it did, I just can't take the risk, And I ended up closing up shop. This was my last trade. The one that I took on BNGO, where I stopped out on this candle here, that was the last trade of the day for me. I didn't even take practice trades after that. What I did do was I played first. I played this halt in my head. After resuming at 173, there was a drop down to 170 where a big bid support came up, and I thought, okay, well, this is a high of day breakout, and there's a huge bid support level below it. And by that time, the level 2 had thinned out a lot. On this drop down, I mean, there were 150,000 share orders getting washed out in a quarter of a second, but on the way back up, it had thinned out quite a bit. And I thought, okay, well, that's good news for me. That makes it a lot easier to predict the reactions that are going to take place. And the 170 level was the time when I thought, okay, buy. And I thought buy 250, and then coming out of the next halt, when we failed to break below the previous halt level of 188, it came back down, tested the previous halt level, and then shot back up again. That's when I thought buy again, and then etc. And I ended up actually thinking a top tick here. One of my exits for half the position was at 243, and then I would have stopped out of the rest during this downward halt at 213. I didn't end up booking that in any place, neither in my simulator nor my practice trades, but I did play it pretty well. My ideas were going pretty much the way I had planned them. I would have got all out down here at 213 and then maybe got back in on the halt coming up at 228. I don't think I would have played it past this stop out at 213, however. I think I would have been turned off once again by the downward halt, because you never know what's going to happen on a downward halt. And at the same time, we were approaching the pre-market high levels where it had reversed. And this pre-market high coincided very well with the resistance on the daily chart, which I won't bother showing you. So all this wrapped up made for 2 trades on the day, 100% accuracy, a 7% gross or a net ROE, and I was happy with that. I felt absolutely terrible by this point, and as you could tell by the way I started this recap with that video that I made at 8 p.m., I was so much in pain by the end of the day. Like it never stopped getting worse throughout the entire day. I couldn't focus whatsoever, and I felt like the light from the screen was just killing me. So I not only shut the day down here, but I actually I wasn't even able to make the recap. And I just felt like, okay, let's just be thankful for this fourth green day in a row, fourth day of more than 5% ROE. And let's just take this $2,600 into today. And that's exactly what I did. So what we're going to do now is take a look at that video that I talked about the halts. And the place we're resuming is also what I just talked about at that 213 downward halt level. Now I've already edited this video to cut out some of the halt time so we don't have to sit through there. But there are going to be quite a few things that I want to talk about. And this right here, see this imbalance by plus 2,700? This is all information that gives me an idea of what's happening during the halt. What kind of orders are being put in, where support and resistance exist. And I won't get too deep into it now. I'm pretty sure I'm going to turn this into another, a separate video, a non-recap video to explain all of it. But the one thing that you want to be paying attention to is the at price. So at 211, that's going to be the resumption price on either the ask or the bid. Now on a downward halt, it's going to represent the asking price, and on an upward halt, it's going to represent the resume bid price. And in this case, it's a downward halt. So when I hit play, 2 seconds later, the stock is going to resume, and you're going to see that 211 will be the ask price. So also notice right here these H's. 226 is the upward halt level, 193 is the downward halt level. This is very important information that a lot of brokers don't offer, or that you have to ask in order to receive. And what we're going to see in this video shortly is a couple of false halts. We're going to get them on both sides, and I talk about those a lot too, and they're pretty important. So I'm just going to pause real quick here to explain something else, is that on an upward halt, if you don't have any of this information, if you don't have the halt levels visible, you can still know whether or not a pre-halt phase is taking place. And how you do that, on the upside, you're going to see there's nothing but bid orders going through on the tape, and you're also going to see bid orders stack. That's what happens on an upward halt. On a downward halt, it's the opposite. You're going to see ask orders going through, and you're going to see ask orders stack on the level 2. So I'm going to resume the video here, and we'll see that coming up in a few seconds. So now we're moving back up. We've hit the halt level. You can see the orders stacking up on the bid side. By the way, my coloring is purple for bid orders. And you just saw there we false halted at 29. Now we're pre-halting again at 29. And this is probably gonna work out at 29. This is enough stacking that it's probably gonna go through. And so there you go. And we just halted, and now you can see that already the intra, or like, it's gapping up during the halt, and currently it's at 235. Now that halt ended up being a 10-minute one, and I fast forwarded. I've cut out all that stuff, and you can see that in those 10 minutes, the gap up price has moved all the way up to 250, which is a pretty substantial gap on a $2.28 stock. So now let's watch for the resumption that's coming in 10 seconds. And you'll see some similar things happen at this resumption. And if you're a new trader, this is going to give you pretty good insight as to how tricky it can be to play these. You'll notice the resumption was in the 40s at 49, and we're already flashing up and down. I mean, this is a lot of information coming at you all at once. And in this particular case, there are some pretty big spreads. Now we're up to 60, and just like that, did you see that? So let's back it up a second here. We were at 60 at 11 o'clock and 29 seconds. We were tapping 60. And then just like that, out of nowhere, we went all the way back down to be, now we're in a pre-downward halt phase. So we went from halting at the upside to halting on the downside in a matter of 3 seconds. And that goes to show you the volatility that you have to deal with if you're going to get involved in this situation. And this is a big part of the reason why I like to go into halts with a profit cushion. I don't want to go into a halt I don't want to jump in right before the halt on my first entry. Like I said earlier on this BNGO trade, where you can see my orders up here in this window, this is a big part of the reason why I didn't add at 162 going into that halt down here. I wanted to maintain a profit cushion in order to give myself the chance to escape in the profit zone if things didn't go my way, which they didn't. And so I'll resume the video here, and you'll see, I believe we're going to see a false halt to the downside here. Now we're stacking up on the downside, and you can see the ask orders and the tape are both stacking up. And once again, it's a false halt. And just like that, we're back up to 246. And so, this bid order down here at 233 is certainly making a difference. And it looks like, I forget what happens, to be honest, but it looks like we're going back up and probably going to halt going up. But what you can take from this video is just how difficult to predict and how quick your reaction times need to be if you want to get involved in this situation. And now we're pre-halting on the upside. And it's a false halt. There we go. We broke out of that pre-halt phase, and we're back down at 250. Now, I fast forwarded a few minutes here just to get through all the chop. There was a lot of up and down, and now we're about to enter a pre-halt phase on the upside. Once again, you can see all the orders are bids, and as soon as they don't become bids, like right there, as soon as different color orders coming through, that means that the pre-halt phase has been broken. And usually that's a danger sign. In this case, there's a huge bid that came up at 55. Even though it got washed out, we're still in a pre-halt phase on the ask side. And this is a pretty strong signal. Going into this, I would feel pretty comfortable adding on at this point, especially if my average were lower down. And I believe this is the one that eventually does halt going up. It sure looks like it right now. You can see all the orders going through the tape are on the bid side. And right there, we just halted. So the halt price is $2.59, and yet we've only gapped up 1 penny, which right now is looking kind of weak. Now this is where the video has already ended. I stopped it at this point. I just wanted to show you that in order to give you an idea. If you're new to trading, or you haven't played halts very much, or maybe you just got involved in trading a couple of months ago and you haven't seen what a halt market looks like, that's what it looks like. When you go through these crazy halt festivals where it's just squeeze up, halt, resume, squeeze up, halt, that's what it looks like, and that's what you have to be ready for if you're going to capitalize on those plays. So that's a wrap for me today, guys. I'm gonna give last look at my daily results, and I also want to point out a pattern that I was super happy about coming into today. Now, if you look at my net P&L versus my trades relationship, which is not shown in any of the stats on here, but I just want to go through my last 4 days and show you a pattern that I noticed that was pretty good. So $106.58 on the 11th divided by 6 trades is an average net P&L of $17.76. On the next day, got $199 in profits divided by 6 trades. That's $33 per trade. On the following day, it's $219.10 divided by 4, which is 54. And you can see the relationship here. We're getting better and better. It's going up and up and up. And I was super happy about that coming in. I went from $17 average trade to $85 average trade with never making a new low. And so to me, that screams that even though, these last 4 days, I was really upset with the amount of money that I left on the table. I feel like I could have had multiple $1,000 days had I played better, had I not had these order issues. But coming into today, I was also quite pleased with the fact that I was making better progress per trade. My relative commissions were getting lower. My average commissions were getting lower. Everything was ticking up in a lot of different ways. And so that's something that came into today really happy about. And last night I went to bed super early. I had a big, very nice supper that didn't actually help my headache, but it made me feel at least pretty good. And I went to bed pretty early and got a good night's sleep.